All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here for about 2.5 hours. Some interesting stuff going on out there. Here today, there's some decent volume out there. I was asked earlier about the volume in this market, and is there any meaning in it? And one of the things that we're not seeing on this rally is we're not seeing that it's just super light volume that nobody cares. There's a normal amount of volume. It's not high, it's not too low, and a normal amount of volume means nothing. A normal amount of volume doesn't tell you anything. It doesn't put advantage bull, advantage bear. When you see a really light volume rally, that's advantage bear. You see a real heavy volume rally. Depending on how it goes, it could be either way. But normal, it's not going to tell you anything. And that's what we're seeing here. We are seeing a very normal volume rally. And, that in and of itself is not something we can look at and say, well, that's bullish or that's bearish. And that is what we are seeing. In fact, this morning, you look at the volumes, it's pretty much just kind of right as they've been, just kind of this traditional, just about, 4,000 a minute on S&P futures, no big volume spikes. We had one of, 10,000 right here, so nothing near the 15, 20,000 area. So nothing, nothing giving an advantage one way or the other when it comes to the volume on the market, okay? It's not this way with some individual stocks. There are some individual stocks where we are seeing some very low volume rallies. So while yes, the S&P is popping, and the SPY right up to its upper band. We're seeing other stocks making this snap on some very, very low volume. And those are the ones that are the most interesting to me to want to go and short, to want to go and play the next leg lower. You look at a Halliburton, it's not quite that way, but it is. We are seeing lower upside volumes than downside volumes. You go and you take a look at a Caterpillar here. And, what this rally has looked like, there's not been much volume on this rally, right? Today, we'll see kind of where it ends up. But not only is this little rally in Caterpillar not a big volume or not even a normal volume rally, this rally right here, that volume was pretty light. This wasn't a conviction rally. This is, hey, the market's dragging us up rally. And, so we do see some where the volume story is a little more bearish, but we can't talk about the overall market as this kind of real light volume rebound that going to get sold into, very aggressively. Now, before we go any further with volume, I'm just going to throw one more thing out there for you to consider when it comes to volume. And just because my stance on volume right here in this market is it means zero. It means nothing. I know when I say something like that, it's like, well, no, there has to be a meaning. There has to be a meaning. Well, not always, right? If we come back to 2018 or 2008, take a look at some of this action, right? This is the Lehman Brothers, and everyone thinks of this Lehman crash as, hey, the market just went down every day. The market just, it was just this blitz lower. Well, take a look at some of these rallies. This rally is after the Lehman crash. Look at the volume. Some of the highest volume we had seen in years in the market on the upside 2 days, taking the S&P from basically 1130 up to 1260. I mean, a 10% rally in 2 days on some of the most massive volume the market had experienced in a long time. And any follow-through up? No. Right? Any follow-through up? No. So, high volume tends to suggest something is changing. Normal volume tends to suggest nothing's really changing. Low volume tends to suggest, hey, there's something wrong about this move. Right, and that's the typical. It's not an always type of a thing, but it's I bring this and I show this to you just so you see what some of these rallies can look like in the midst of a bear move. And so the market rallying here, market up big. I've not found any place to step in and go short. Not yesterday, not Monday, not yesterday, not today, to where I can go, man, I feel really good about this setup. They're just not there. They just aren't there. And I talked yesterday about some of the bullish setups that are there, and, you can play them off of yesterday's low. And my big concern is there enough upside? Is there really enough upside when you count the implied volatility drop that'll come into options and the magnitude of move? And the reality with some stocks, yeah, there is. I mean, Bank of America, the options have moved. They've moved plenty. Here today, been a nice gain if you had Bank of America calls. Notice Bank of America was a big laggard yesterday, leading here today. That's a bull market tendency. That is a bullish tendency to see where you get one day's laggard turn into the next day leader. That is not a bear market tendency. And so, we are seeing that happen this week, which I think has to give the bears pause, has to give the bears kind of go, whoa, wait a minute, what is this, right? And so, yes, there are some things that are moving enough, to really kind of move the options. For instance, Adobe, which has just been vertical the last 4 days. It's kind of gone the way of Apple, which, both of these stocks just vertical in the last 4 days here. Both on good volume, both on analyst upgrades. And when you start to look at the pattern and the breakout and what is kind of going on with these, it looks like something like back here in August, or something like back here even in February. This isn't the type of rally that just kind of turns around and about faces and drops, right away. Now, we have seen Apple stalling for the last 24 hours in this level, but, I'm not going to read too much into that. But, we see plenty of stuff that is moving, but there are lots of things that just really aren't, that are just kind of stuck, just kind of grinding. U.S. Steel, yep, it had a little bit of a bounce. But, we're not talking about this pulling an Apple or an Adobe. You go and you look at in the tech sector at an Amazon, right, and it's back to its highs from the week prior, and then you go look at a Micron, right, and there's just a big difference, right? There's a big difference, and that's one of the really interesting things about the last 2 weeks is we are seeing the differential in here. We are seeing what money managers are willing to buy and what they're not willing to buy. And that, if you look at the market and you say, well, you know what, where's the next big sell? What things are going to, sell off? Well, if the next market sell-off is just a shallow couple-day sell-off, right, stocks like Apple, stocks like Adobe, they're going to hold up really well. Microsoft is going to hold up really well. It's going to do well, right? We've seen money go in. Fund managers aren't going to be just fleeing out of those. The stocks that are lagging, the Halliburtons, the Microns of the world, the U.S. Steels of the world, they're going to be the ones that go and hit new lows. If we're talking about a shallow market pullback, right? 2 or 3 days worth of selling. It's these stocks, these Microns, these Caterpillars. They're going to go hit new lows. It's not going to be the Microsofts of the world and the Apples of the world. If the next leg of this market is sharp, if the next downside leg is very sharp, where there's a big catalyst and the big bad kind of bear signals, get really loud, then the Microsofts and the Apples and the Adobes are going to drop and drop significantly, right? It's going to force fund managers out. And so for the big leaders in the market to really get taken down, it's going to take a big market move. For some of these laggards to get taken down and go to new lows, it's not going to take much. It might take a 10-point down day in the market to see Micron trade down to 36. It's not going to take much. Okay, and I think that's something to keep in mind. And as I look at my next trade setups, it's something that on my watch list I've gone and noted and am very aware of. As you know, I would like to get into some Home Depot puts, right? Here's Home Depot, and this type of move right here in charts, where you see this kind of pop up and then drop, and you see this massive volume, and you just start to bleed. Generally, the next leg is down, and in many cases, it's down big. And it's one of those where Home Depot is priced for absolute perfection fundamentally. 2018 was a monster year for Home Depot, one of their best in their history, right? If you go back and look at their earnings report, it was, one of the best. In fact, the CEO said it was the best year in their history. And, they're absolutely priced for perfection. And any little drop, in numbers is just going to lead to some selling. This isn't a, hey, you can buy it cheap type of opportunity. And so I look at it from a sell standpoint and say, okay, you know what, can I play that next leg down? And I look at it today and go, all right, I could jump into the puts here, right? I could jump into them. The stock jumped this morning. It was up about 90 cents early on. And here we go. It went ex-dividend today, so that's why you see the, you see this action. But you see this initial pop, and the stock was up about 90 cents, and it's just kind of bled, the rest of the day. It's kind of doing something very different from the overall market, right? Doing something very different from that market standpoint. So, okay, do I go after it? Is there a good stop level? And that's my problem with it. There's not a good stop level. I could use today's high, but that's a pretty arbitrary number, right? There wasn't anything about today's high. There was no volume on that. There was no real action. Nothing to suggest that this high means a hill of beans. So it's a very arbitrary number. And so I could go after it, use that arbitrary number, about $1.40 risk, there on it. And if you've ever traded Home Depot, it's more than $1.40, just the way the stock trades. The April options, the spreads aren't bad. If you come into the weeklies, the spreads get ugly. They just get really ugly. So, my only option here is to play the Aprils. And so I need to be in it when the stock's ready to move and ready to move big if I'm going to, do well with the trade. And so, okay, it's okay. And for a lot of bearish stuff out there and a lot of the setups out there for the bears, that's about what it is. It's okay. It's okay. It's a decent set. All right. You short it here, starting to break the 7-hour moving average. You use today's high as your stop point and go. It's not something where you have an overwhelming advantage, where the probability is overwhelmingly in your favor, but the risk reward is decent. And so in this case right here, it's about $1.50 stop, level. If we look at this option, for about $2.40 on the 180, the delta's about 40 cents. So, we're looking at about a 60-cent loss, if it hits our stop point, and about 10 to 15 cents on the spread. So, we're looking at about a 30% loss if it hits the stop level, right? Okay, that's decent. What do we need for it to go our way? About a $5 drop to double our money. Can it drop $5, 182.5 to 177.5? Right down here. Yeah, that's realistic, right? That's not an unrealistic move or a move that would be out of the ordinary for Home Depot. This last move right here in a 2-day period was a $5 move, right? So a $5 move, it's not bad. It sets up. It sets up well from a risk reward standpoint. Is it one where the probability of success is high? It's about it's about 50-50 there. It's not one that you can look at and say, well, the odds are overwhelmingly in the favor, that it's going to drop. A gap down tomorrow would kind of confirm that, yeah, it is. but the risk reward on the option won't be that good. So, if I wait till tomorrow to get the confirmation, my risk reward just isn't going to be nearly as good. So, it's one of those. It's a nice, decent little setup, but it's not it's not one of those that I want to get stuck into to a huge degree, right? So what I'm looking at, and I actually have the order prepared, I'm looking at doing about 4 contracts here, right? 4 contracts, that's going to risk about $300, right? Give me reward potential of about $1,000, and that's, okay, that gives me some downside exposure, in a market where I want some downside exposure, and it's on a stock that has the propensity to to move sharply, and to definitely definitely make the kind of move that I needed to move. The other nice thing about this setup here is that, let's just say something crazy happens and Home Depot gaps up $8 tomorrow. Well, the option's going to go to 0, but it's also one where there's plenty of time. They're in the option. There's 36 days. There's plenty of time to let the trade kind of work. It can take some consolidation and, keep on ticking there. So that's my favorite setup out there. And I may jump in before the end of this stream. All right, I may jump in before the end of this stream. We're seeing on the market itself a little bit of sell come in, but it's not too major here. It's pretty light volume too, but this is we're starting to get a little extended, short term overextended for the market, which is anyway. So that's Home Depot. Another one that's very tempting to me is Nike. And we've talked about Nike the last couple days, and I've not gone after it. But this is one where on the daily chart, we have this kind of reversal right here. And, then yesterday we saw a little sell action. Today a gap up, and, it's just like, okay, gap up today, you can't be shorted. Here's my problem with Nike, and the thing that I'm most concerned about with Nike is, where's a good stop point? And there just isn't. Home Depot has a better stop point. Home Depot has a less arbitrary stop point. Nike, you could use 88, but chances are it's going to go hit 88, break it, stop you out, and then fall. That's what this type of setup is going to do. And so, okay, I'll continue to wait for it to close below the low from the prior day. Right? Which is the theme. If you're bearish and you're uber bearish and you want to play the next leg down, that is the theme. If you're going to really get stuck in with some high exposure, the lows from the prior day need to break. At least on your individual stock. And so that's how I'll look at, something like a Nike. Now, oil. We saw the oil inventory data, and I put a post in, or put the data there into the feed. And we talked about oil yesterday, and this kind of bullish flag type of pattern setting up, right? And leads to, hey, chances are for a breakout higher. We're getting the breakout higher. And I made a comment that, hey, if it does break out and then starts to break down, meaning we get a false breakout, it's highly shortable. Highly, highly shortable, right? Well, let's go take a look at the price of oil here today and what it's doing. Here's QM. Here's the 1 hour. We're seeing it break. It hit a new high here to 58, right? It broke that high. And, okay, there's not buyers stepping in. In fact, it's been sold off ever since. Now, the magnitude of sell is microscopic, right? The magnitude of sell is actually a little more bullish than bearish so far. So it's one of those where I'm not willing to go short it here just yet. But we start to see, oil from this point with a breakout. We start to see it pull back below 57.5. it's going to prompt some sellers. It's going to prompt quite a few sellers to come in, and I am looking at that. I would like to play that. I'd like to play it with some Halliburton. I'd even like to play it with some ConocoPhillips puts. Here to the downside, you can see how Conoco has been lagging here of late. This thing just kind of, gaps on down, sits on down here, is not rallied with the market. This thing has, 61, 62, even 60 written all over it. And, one that I would very much like to, play lower. I looked at it yesterday, decided not to get into the downside yesterday, just simply because of what's going on with oil and some of the upside risk here. You can see on the hourly chart, it's still above the 7-hour. So, just a little bit early there. So those are some of the stocks that I have my eye on, that I'm looking at, to look to short there. You say, well, Jeff, why don't we look for long opportunities? And you're right, and I keep my eye open and I go, okay, do I want to get long, this stock or that stock? Some of my favorite stocks overall. One that I think you can make a great case for is American Express. American Express here this morning came out with some of their data. Some of their full year expectations, and I'll show you the pre-market chart here on American Express. But when the data was released, when American Express released it, you can see stock dropped. It got sold, and it's been nothing but bought up ever since here today. It's leading to some of the strength in Bank of America, as there are some similarities there, that brings in some of that strength. But this is one where if there's going to be some follow through, American Express, to go hit a new high. Look. We've talked a bunch about American Express. This is a $120 stock fundamentally. And, is this enough for it to get there? Very well could be. You look at something like a Visa, which, don't look at Visa like American Express. They're two different companies, but you see Visa pushing into brand new highs, right? It was one of the first stocks out there, to push into new highs, breaking the high from what we saw in September, October. And look, we've talked about Visa. It makes a new high every single quarter since its IPO. Every single quarter since its IPO, it's made a new high, and barely did it do it in the fourth quarter of last year. And, it had to make a big rally to do it again this quarter. But once again, it's another quarter for Visa where the stock makes a new all-time high during that quarter. And it's done it every quarter since its IPO. I've never seen anything like it. Never seen anything like it. You can come back to the monthly chart here on Visa. This is what it looks like. Right? This is what it looks like. And, it's just pretty amazing and pretty spectacular. MasterCard hasn't had that same thing, but you can see it is pushing into a new high here as well. You go look at like a Capital One, lagging quite a bit. In fact, I still like that, that combo trade of American Express higher, Capital One, where, both are probably going to move up. And, when the market goes up, both probably going to move down when the market goes down. But American Express is going to outperform, Capital One here overall. And, I expect that to continue to happen. Gold miners, we talked about gold yesterday in the longer term. In the shorter term, I mentioned even this morning, it's not a great risk reward. I'd love to see a little pullback in the GDX. A little GDX pullback, would give a lot better risk reward, and give an opportunity to go ahead and get in and look to play the next leg higher. So anyway, those are some of the things that I'm looking at here today. This could be a really interesting market if the IWM low from today gets broken. And, I might get aggressive here this afternoon if that happens. But without that, I may go dip my toe into a little bit of Home Depot. And, but this kind of screams of a stock that may rally a little bit into the close. So I'll probably wait until, later into the close, or wait for the confirmation that we talked about to come on in. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.